or two.
Okay,
So,
got it.
welcome to the Innovation Fund Bootcamp Fireside Chat series. I'm super excited to be moderating today. Today, we are joined by Enzo Villani. Currently, he is the Chief Executive Officer and Chief Investment Officer at Alpha Sigma Capital, which has realized 11 unicorns since its inception in January 2020. Not only that, Mr. Villani is also the Chairman and CEO of Blockchain Acquisition Corp, which raised $115 million in its IPO just 2 months ago. Before that, he was Chief Strategy Officer of Transform Group, which represented the launch of 37% of the altcoin market capitalization by 2019, co-founder of Blockchain Wire, and head of international strategy and innovation at OKX. Mr. Villani has raised $600 million in his career as a corporate strategist and M&A entrepreneur. So I guess you can say people trust his judgment. So Mr. Villani, we're super excited to have you here today. And with that, I'll hand it over to you to let you talk about your experiences before diving into some questions.
Sure. Well, one, actually, thank you for having me on this call on the Zoom. I've been in the financial markets for about 25, 30 years, but I started off actually as a web front-end UI and UX designer, which was interesting. And I built a lot of the first websites for banks and actually brokerage houses back in the early 90s. I actually did the first online comic book company also back in 1994 with a bunch of guys out of Marvel. But I ended up in the financial sector because I had experience in the financial sector. Throughout college, I worked every summer at actually Shearson Lehman Brothers on the block equity trading desk, which back then was, we traded only on the New York Stock Exchange, and we only traded large blocks of stock. So I knew a lot about the back office, and I knew a lot about how things worked on Wall Street. So when I started building websites and getting into that world, I decided to focus on the financial tech sector. That brought me to a point where NASDAQ, so in 1998, I started my own firm. It was a kind of interactive agency plus a lot of innovation work called Rivet. I was 28, and I was there till about 2001 when I sold out my shares and actually joined NASDAQ. The whole concept back then was to, again, we were building a lot of web products, a lot of innovative products, some mobile. We did some of the first mobile apps for actually NASDAQ.com, which is pretty interesting in 1999. It actually worked somewhat. But I spent about 7 years at NASDAQ, and I basically became the head of strategy on the issuer side. So I was part of the corporate strategy group first, which was, I got involved in everything from the market site redesign to trying to buy the London Stock Exchange. And they hired me because I was probably the most entrepreneurial person that they knew, that also understood NASDAQ and understood the NASD before NASDAQ kind of separated, because I had been actually consulting them for about 4 years prior or 3 years prior. So, I created NASDAQ Corporate Solutions was my big strategy. I basically the idea was all of the exchanges started to look more alike. So if everybody was going to trade on networks, then the difference between the NASDAQ and the New York was really not that much different anymore. So we had to come up with a new strategy to retain the issuers and find new issuers. So I started wrapping products around the issuer. So what happened was we were only allowed to charge a certain fee. And the New York Stock Exchange could charge Microsoft $500,000. We would only be able to charge them $100,000. So what I did was I built products around what it takes to be a public company. This was also during the Sarbanes-Oxley laws coming into play. So it was the perfect time for us to sell products that would help them be compliant, as well as, service them from an investor relations standpoint, because a lot of things that NASDAQ did was around marketing their companies. So it was I don't know if you guys ever learned the kind of hedgehog concept in a book called Good to Great. So that's a book that when I joined NASDAQ, Bob Greifeld kind of handed that book out to everyone. And the hedgehog concept is basically You figure in strategy, you figure out what the company does well, and you kind of start to double down on it, but you don't have to do the same product, but the same theme. So we were really good at marketing our companies. We had the market site, we had, the ads with Starbucks in it and all the stuff. So I was like, well, why don't we just do investor relations and kind of public relations services products, really, that would help them do, because they were used to us helping them market themselves and being actually compliant. So that was the whole concept there. I took it from about 0 to 50 million. I did 2 acquisitions, and then I left and I started doing roll-ups in that industry. So I rolled up about 16 companies over 2 roll-ups. Two roll-ups. One was US, Europe, heavily focused. So put a company in Stockholm, Paris, London, Munich, a bunch of different these firms, like investor relations companies, consulting companies. And then I did a brick version in actually Brazil, the leading investor relations firm in Brazil. They had about 80% market share. We acquired companies actually we actually got a deal done in mainland China, which is very difficult. You technically don't own the company, but you kind of do. It's just there's a lot of rules. In Hong Kong, and then we also acquired companies in the US and in Europe. So it was more of a brick services version. We were trying to expose into the Russian market. So that's my background. It's exchanges, fintech, the financial markets, the structure. So when I got into crypto or blockchain, I literally was like, this is basically going to need everything that I've just built over the last 20 years in a new industry. And I knew Mike Turpin, who owns actually Transform Group, and is like an OG, basically. We call them OGs, which I don't know if that's not really a proper term, but it's a good term. But we called him he was like in Bitcoin in 2011, right? He started the first actual group to fund Ethereum called actually Bit Angels with David Johnston. There's a picture of him at his Coin Agenda conference has been running for now 9 years. And there's a picture of him with them at the conference, and Ethereum is being pitched at the conference, and there's like 20 people in the room. So when I wanted to get in full time, because I was running like equities.com, which was like a financial content site, I called him up and I said, let's start Blockchain Wire, because I knew him. I tried to acquire Market Wire while at NASDAQ, lost a bid, built my own called Globe. Those two merged and then got sold to Apollo. We then did we know all the guys who run it, because they used to work for us. So that we called them up and we said, look, we'll start a Blockchain Wire company. And then I joined his firm as CSO, because he was like, we're going to need people like you in this market. And it was fantastic. It was a 3-year master's class, basically, and I got to meet a lot of smart people. Then the crypto winter hits, and basically what happens is all these people that had raised money, they raised it in ETH. And in order to pay people, they have to sell the ETH. So that really drove down ETH. It crashed like a rocket. I mean, like a rocket. It crashed like terribly. And then all of a sudden, people who thought they had raised 10 million only had 1 million. So, and they were good projects. And what I started doing personally was I started to buy tokens from them off their balance sheet, basically, or out of treasury, even though the token was trading. Because if they kept on selling it on the exchanges, they were just going to destroy their token even worse, because they're not sophisticated traders. I said, I'll buy it at a 20% discount, block some trades, and then I promise you I will not sell more than 10% of the daily trading volume. I will manage it. So I did a couple of trades. One was actually Voyager, and I also bought the stock. And I started realizing that this could be a fund. So I started the fund in January, and I was going to start like a seed startup fund, and I decided to change the fund and focus more on what I would consider it was like growth equity or growth companies, They had already launched a product. They had an ecosystem. They had revenues potentially. They were a little bit farther down, kind of down the road, but still extremely early. So when I started, so we started doing actually, like when we would make these calls and we would talk to these companies that I knew, we'd have to do actually diligence. So we started doing it, we did all the fundamental kind of, I treated it like it was a company. I'm not just going to buy something. And what happened was the research was so good that I was like, we should publish the research. And it was also because of the regulators. So it was a way to like cover my, so the problem is that if you go out on Twitter and you own a stock and you're a kind of fiduciary, right? And you start touting the stock and nobody knows you own it, you could get in trouble. So I said to myself, I said, look, I'll put out a press release on Blockchain Wire saying that I've invested in the company. I'll also put it on my website under the kind of portfolio so you can see the logo. And then I'll also start publishing the research. So now you even know, well, the SEC knows why I did it, right? So they'll it's kind of more of a transparency play. But I also realized that it was probably good for marketing. So that's how everyone recognized that we had, so we started writing research of Voyager, Celsius, Quant, pretty much unknown, not that well known, not a lot of institutional money in them yet, or they had some institutional money, but not real a lot of retail maybe. We were calling, we did we would do DCF models, comps. And what was interesting is the companies, even though they're private, would give us a lot of information, including their financial information. We went and publish it. We would show them the research before we published it, just so that we weren't putting something out that was confidential. But the goal was to just, show it out. And Alex Konomashinsky, who's the CEO of Celsius, who I know, I said, don't share the research. I said, I was like, this is not for public consumption, because at the time I was more like, let's just send it to people who we know. He puts it on his Twitter, and overnight I have 3,000 people reading the research because it's in DocSend, and I'm like, and there's in 65 countries, and I'm like, oh, people really want research. So then I had an application put on my website and you could apply, and anyone can apply to receive the research now. But we'll do a check, we'll contact the person. We don't want, we have we're up to almost 6,000 people now in 18 months, starting off with 100. So, it's getting a little bit hard to contact every single person. But we do test the email is verified, but then we'll email them and ask them a couple of questions and make sure that they're not just a bot. And we want to get to know them anyway. So what's interesting is that's how, so then when I was working on the SPAC deck to raise the money for the SPAC, the investment banks were like, well, you guys have done so well. And I won't tell you the percentage, but it's quadruple percentage, right? So you guys have done so well. You have these, how many companies are on your target list potentially, or who could be your targets? I said, well, we have these companies that are all over $1 billion market cap on the token side, but they're real companies and they're doing serious revenue and they're growing at an exponential rate. And they're like, well, how many do you have? I said, I don't really know. So we did some research. We went back and I was like, 11 in 18 months. I'm like, wow. I'm like, that's interesting. So we put that on the slide. And then I was like, we have to tell people this. This is because the VC, an analyst here was mentioned to me, he goes, well, the chances of a venture capital firm having one unicorn in 5 years is 2%. I was like, wow. So, and it's yes, we're smart and we're fundamentally focused, and that's all great and fantastic, but it's also because the market is just burgeoning. And you see the market, what's happening actually today. Today, we're we can talk about that in case you guys have any questions. But the market is there's going to definitely be some moves in the market next year, because there's an anticipation of the regulatory side coming in potentially on a really strict, like, saying every token is a security. That could happen. ETH 2.0, I don't know what you guys know or follow, but if you think about it, ETH 2.0 will lower gas fees significantly. So think about it this way: when Robinhood launched with zero kind of commission trading, right? The zero commission trading, and it's easy to trade, creates a lot of volume and volatility, because it's now, so all of these folks who maybe had a couple of $100 or a couple of $1,000 in ETH or an NFT or something, but when they went to go sell something, the gas fee was $300. Oh, no, I'm not going to sell it then. Now, when it goes down to, a couple of pennies or 20 cents or a couple of dollars, what's going to happen? You're going to see, and I don't know which way it's going to go. I just think you're going to see an extreme amount of volatility. But also, the other thing that I found out yesterday or the day before was someone mentioned to me that cryptocurrency volume is like 3 or 4 times more than the NASDAQ and the New York Stock Exchange volume, which I don't even know if it's true. So I'm having somebody actually look into it. There was someone who was pitching me on something, and I was like, is that true? And if that is true, that's insane. I mean, if you really think about the movement of this market, it's just a tremendous, it really is unbelievable that it's become so, because it's still very small. There's about 150 million, maybe 200, maybe now more, but about 3 months ago, there's 150 million wallets. And we had just passed, that was the same amount of people that were online in 1994. So someone had posted like a meme basically that said 150 million wallets we just passed. I think they might have been I don't know if they're just Bitcoin wallets. I have to assume that they're ETH and everything. I mean, just wallets. 150 million wallets passed. That's as many people that were on the internet in 1994, which just tells you that we're still in the beginning of this process. So I don't think the market's going to go anywhere, but I think next year is going to be an interesting. I think the regulators are going to get more regulatory, and the products are getting better. Like now we trade options on ETH and BTC. So there's a lot of great new products that are coming on the institutional side. So yeah. I'll stop there.
This is a lot for people to take in, but it's very useful information, I feel. You talked about, your early journey, and not everyone was here. So I do want to point out that you were one of the earliest people to get on the internet trend, and now you're like very early on this Web 3.0 people call the trend. I do want to ask you what kind of differences or similarities, and also about how your various backgrounds have positioned you well to go into this and how you did so. But before we go into that, this fireside chat is for our Innovation Fund Bootcamp winners, and I do see a few. So if you could introduce yourself to Mr. Villani, talk about what your startup is about. If you're comfortable, then that would be great, and then we can move forward.
Great. Anybody want to go first? So it's funny. I'll just say one thing. So Canzano, that's the town that my parents were born in Italy. It's a very tiny town. So Christopher Canzano, you're named after a very small town in Italy where my parents were born. And actually Ron DeSantis, who's the governor of Florida, his great-grandfather was also born there. It's just, I've never seen anybody with that name, and I'm very surprised. I'm like, but it's spelled with an S. It's the only different, but it's interesting. It's the same, basically the same word. So just wanted to let you know that you should probably actually Google it, and you'll see it's a little town in the mountains. So.
Chris is one of our first year analysts, and he might be a little shy, but
Okay, it's okay, it's all right.
But I guess we can go forward. So I do want to hear about how you got into, first of all, you graduated college as a communication arts major, and then you were an art director and interface designer, like founded the internet division of Wall Street system integrator. You've been ahead of this curve for the internet age and now the Web 3.0. Like, how do you position yourself so early into these trends?
Well, back then I just was like, I wanted to go into advertising, and when I found the actual internet, I was just blown away by it. I mean, this is a really early. This is like 1993, and I had volunteered at what's called an Ed Week seminar on one-to-one marketing and the actual internet. And then I started going to Pratt. I went to Pratt for actually grad school for graduate type of design, and I got an internship at this CD-ROM company that needed an online art director to start this virtual comics company, which was a bunch of guys from Marvel. And it was and I went there, and then I never finished my master's because I was literally sleeping under my desk trying to build comics to fit over a 14.4 modem, which is pretty hard. But so what I compare, it's funny, we have a company called Airwire. So it's airwire.io, but it's also an app, and it's an NFT camera app. So you can literally take a picture and mint the NFT in 10 seconds, and it's free. So there's no gas fees because we have it on our own chain. But the Airwire, the NFT world, is very similar to Web 1.0 in some ways. And because if you watch the OpenSeas, having all of those NFTs load, it just crashes. It's very similar to some of the things that were going on then, and but their expectations now are much higher. So I know that OpenSea went down actually yesterday or the day before, and they have $100 million in capital. They have a huge team, and we have Airwire, which is just like OpenSea but cheaper. And we have a team of about actually 20 people. But what was interesting is that even the Airwire guys, they had a problem. Their site was down for like 3 days in maintenance mode. So you could look at stuff, but you couldn't do anything. And it's because NFTs are difficult. That code is flaky. And when I tell people, I'm like, look, we're still in the real nascent early days of this blockchain, and it's not. I mean, Bitcoin's been worked on for over 10 years, the Bitcoin network, and it's very solid. And Ethereum is very solid, pretty solid. But you know how long it took them to get to 2.0, which is supposed to come out actually next year? It took them like 3 years. So you can't expect, your expectations have to change, and you have to understand that this is definitely still a very new industry. But when you see guys like Jack Dorsey quit Twitter, leave Twitter and change the name of Square to Block, it's not going away. So that's the same thing I saw then, and then spending time and then being an art director. Because I wanted to be an art director, that's what I wanted to be. But I realized, maybe this is going to sound very, I don't know, like not that good. Like I was like, you can't make money being a graphic designer, really. So I was like, this doesn't work for me personally. But what's interesting now is NFTs. I know, we know actually Justin Aversano, who sold his photographs for $1.2 million a piece. We know the guy, the Veritas. I talked to the Veritas guy who bought the Beeples for 69 million, which he basically bought because it was kind of like a joke in a way. Because they have so much money, but it doesn't. But what was funny about that was, I'm like, artists now and graphic designers, you can make money and make royalties on your art and products forever, and that's amazing. But that's one of the reasons why I didn't stay on the art side. So I had a kind of interactive agency. I ran that, and then when I went to actually NASDAQ, they asked me to join the company. I didn't even know why at first. They were like, "You should be in our strategy group. You're an entrepreneur. You know everything about the NASD and NASDAQ. They're like, you built some great products for us. We want you to be inside. And I was 31. I was like, okay. I mean, it sounds like a great opportunity. So the good thing about my design skills is at the time I had really good PowerPoints. I could sell my ideas better than everyone else, basically, because a lot of people are just analysts. You know, they're using spreadsheets. You can't sell a story on a spreadsheet. You can sell part of it, but you can't sell the whole thing. So, you should definitely have skills on presenting and keeping things simple, right? That's probably the best opportunity. But nowadays it's really interesting what's going on. I mean, so the way when I talk to people who are old, who are like my age, who are from the kind of internet era, I say, look, in the internet era, we decentralized information. And you can argue now that it's been re-centralized because of Google and because everybody uses Google, right? So it's kind of like been re-centralized at some level, but it's decentralized. I mean, if you can find anything. So all of the information before that was centralized in a library or a place, right? So this is where we're decentralizing the financial layer of of human existence. So humans trade information or they use information. Now they're actually trading a transaction. They're having a transaction, and it's decentralizing, and that's extremely interesting. And then I don't know how you guys feel about all of the meme stocks and all the Shiba Inos. Like we don't invest in stuff like that for fun, but it's like it's interesting the power of retail investors. I mean, the power of Robinhood is very interesting now, and I kind of like seeing, to be honest with you, I like seeing that some of the hedge funds got kind of caught on the wrong side of the retail, because retail has always been like, not really treated that well. And as an investor, but also as a person who worked for issuers, I was like, this is cool. This is great that it's happening.
And this leads on to the next question very well, but you say like when like Robinhood, it kind of decentralizes, gives a lot of power to people to be able to invest. But that also brings a little bit of confusion between what is hype and what is real. And I wanted to ask you how you differentiate startups that you think are successful and what kind of factors do you look into?
It's the factors that are in every business book in the world. Basically, it's the same factors over and over again. It's usually it starts with the people. It always starts with it always starts with the concept. But then like in this era right now, this is very similar to the .com era where you're going to see hundreds of different companies doing the same thing. Well, they're all trying to do something similar, fix a similar problem. So it comes down to really the number one point is the management team, experience, a little experience, or skill. So if it's younger, if someone is like who's just out of college or just didn't even there are guys and there are people in crypto that are developers that had never even went to that don't go to college. So you're not looking at like a resume really that much. You're looking at and then you bring in a technical person to look at the code stack, and it's all actually open source. So it's easy you don't have to. It used to be in Web 2.0, you weren't allowed to see the code a lot of times. In Web 3.0, you can see the code, and then whoever gets mimicked the most. So you'll start seeing, and you can use we use GitHub to count how many developers are using a certain protocol. The more developers, the more dApps, the more applications, even if they all fail, that means that protocol is going to have the most important thing, which is a dev kind of a community of developers to support it. In Web 2.0 world, Microsoft used to go out and used to certify people. I think they still do, like Microsoft certified developers, and you take these classes. But they used to give them away, and they would give away money to get you to go to the classes and become a Microsoft, actually certified dev, because they knew that the more devs they had, the more Microsoft would be utilized, like Visual Basic and all the whatever products like SQL and all that. So they were really focused on that. So that's happening now, but it's all about the community. And instead of doing it through classes, they're doing it through GitHub, Telegram, kind of Discord channels, right?
Yeah, you
And
mentioned
Reddit.
the Discord channels, which people don't even have their real name on that. You can be talking to someone whose name is Fish Cakes, and he's the developer of this code, which is all public.
Yeah.
And do you because there are VCs who shy away because the code is all public, because it can be mimicked so easily. Is this a concern that you have too, that you invest in a company and they just get mimicked and twisted to something better by someone else?
So we don't, so we'll invest in core protocol tokens like the Aave for DeFi. We stayed a little bit away from all the different little DeFi spin-ups because we were like, there's for that reason, there's not much. And I saw how easy it is to copy. I mean, I had somebody, a developer basically made a copy of Uniswap and turned it on in like a couple of days. So I said, okay, well then the value is in the attraction. So you have to be, so marketing is a key issue here, but yeah, I think we do shy away from completely things that, like, we won't go, we don't do Me Too. We try not to do Me Too investments that much. But in the gaming sector right now, in the metaverse sector, we're a little, we're probably about 20% of the portfolio is sitting in there just because it's grown, because the Splinterlands, it's grown a lot. But we also invested in other like gaming and metaverse platforms. We think the metaverse is, I mean, that's going to also have a massive shakeout. But there's some IP that can be in metaverse, even though it's decentralized, like a Decentraland. There's IP that you can build on it, and you can utilize IP inside of it. So, like licensed characters or stuff. So there's an opportunity there where there's IP, but there is an issue there. There is a challenge when if you're investing in a bunch of DeFi dexes, that doesn't make sense to me. That's kind of, I either bet on one or two and then support them in the market, or just to invest in all of them. The only reason why you would ever do that is as a VC, if you're, the bigger the fund, the more money you have to put to work, and all these little, and if they're startups or Series A, it's not that much money, and you get capped out. You may have to spray basically money all across the entire sector, but which will give you a good opportunity to get the winner because you're in the top, like, let's say 7 or 10. So whoever wins over time, you'll probably be okay because you'll get that really cheap discount up front. But yeah, no, it's not that easy. It's not, it's again, it's management team. We also want to know who we're dealing with. So a lot of times we don't buy, like, we've bought tokens off the open market, but we've spoken to the management team.
Yeah. When you talk about the metaverse, I kind of want to talk more in depth about some specific industries in blockchain, if you're interested.
Sure.
When you talk about the metaverse, I've heard this term and I've heard it mean several different things. What do you see the metaverse being in?
Well, there's definitely several different things. The whole working in the metaverse, I'm not even going to bother with that right now. So the idea of an economy in a virtual world where basically it has to be interesting, right? It has to be fun, and it can't just be. It can't be too. It can be clunky at first, but they're going to get more and more sophisticated, right? So we know of a couple of gaming companies that, like, you can consider some of the RPG, like an RPG playing game where it's a metaverse, and you can choose to either do gameplay or crafting or whatever, right? There's all these different little things, and I'm actually not a gamer. We partnered with Ken Cron, who was the former chairman of Blizzard, in any of our gaming investments, because he did World of Warcraft and Diablo. Okay, I'm not really a gaming expert, so what I do is I find the expert and I partner. So from what I'm gathering is that, I've heard all the other like the different versions of, like, a lot of people want to do these NFT concert drops. I think that's pretty interesting. Again, it's hard for me to completely grasp. I think with a VR headset, it's gonna be a lot more interesting, but it's a little difficult for me to be entertained by that. So you really have to do research. So, I work, some of the people that either work at the firm are in their 20s and 30s, or their contacts of ours. We have probably about 1,000 touch points in the crypto world. And there are all these, and and you have to go to people who are going to be interested in it, and who live in it, like, or who played in it, or built a product in it. So the way I look at it is the metaverse is a very wide idea. But I like the idea of decentralized metaverses versus centralized. Like, nobody likes Facebook, right, in our community, right? Nobody likes Meta, but we love Meta because of Zuckerberg. He's like put metaverses a little bit on the map, right? So we do like him about that, but we believe that decentralized metaverses is going to be beneficial to more people than just having Facebook, be in charge of it all. So that's again, it's, I know folks who are really interested in doing a lot of things in the virtual world, and I don't really know how they'll all pan out. Like, it's hard for me to understand how it's going to how somebody would want to just spend all their time in a metaverse. But if you look at three things, one is the trend of the play to earn gaming model, where people can literally make more money. So there are about 2 billion people that make less than actually $20 a day, and now most of them have, and a lot of them have cell phones. So you can play a game like actually Splinterlands, which now has only 2 million people playing it about, which is still, it's big for crypto, it's very small for like gaming. But if you think about people potentially earning money to play a game, and esports gaming or esports teams, leagues, and you combine that with the metaverse idea, I think it becomes pretty powerful. There was someone we know, like one of the top esports teams that's doing like leagues and such, and they were telling us on a call that someone had a concert. I think it was Marshmallow. Someone had a concert online in a metaverse, and they got like millions and millions and millions of people there, and they made more money as an artist in the metaverse concerts than they made on their tour, and they only had like 1 or 2 of them on the metaverse. So there's something there, right? We just have to, and a person like me is not the person who's the active user, so you have to really engage with the active users. And that again is research.
So again, for those who just arrived, feel free to unmute if you have any questions at any point. Mr. Villani, we've just been having a conversation about blockchain and crypto and the metaverse now. So this is all really interesting stuff. I also want to talk more about your company, Blockchain Moon. And I find it interesting how the strategy is a blank check to the startups that you find interesting. In terms of like how you run your acquisition company, because we are also very interested in venture capital.
Yeah. So, okay. I'm sorry. Yeah, please finish.
Oh, I was just gonna say, how do you set up your strategy for investment in terms of like logistics and everything?
So when I started this fund, I did a multi-asset, because to me, everything is going to become a digital asset. And there's going to be, the companies in the early stages, mid stage, later stage, right? Series A to Series E, whatever, in venture terms. But also there's the opportunity to go public. And I think a lot of companies in the blockchain space could easily go public, because when you have a token or you're managing a Telegram with 20,000 people, you're already doing investor relations. You're already a public company at some level. And you're publishing data about how the platform's going or how many kind of transactions on the platform. You're already a public company. So I think that that's a good fit. So two things. When you look at a company who wants to SPAC, so I don't know if you guys know what how a SPAC works, but the company has to be worth 80% of the total merger. So if it's $100 million, $115 million sitting in trust, I have to find a company that's worth at least 400 million. And then they merge, and that company takes over, and then we step off the board, and they're a public company, and they keep the 115 million. That's like their raise. We can also bring in what's called a pipe, which is a big block, like another 100 million, which will be invested at that time. Because if you try to invest 100 million on the open market, you drive the stock through the roof. Okay, so the idea of the SPAC is that it's a way to go public. It's easier than the IPO. It's a little hard to go IPO. As far as process for actually investment and venture capital, I think, we try to be, I have a policy here where you don't be a jerk to the entrepreneur. I mean, it's a really simple policy, but a lot of VCs, like we got invited just recently into an investment that a very large venture. So my business development person, who is also the head of actually venture strategy, he was at an event and he was talking to this group that was oversubscribed. It's an all women team of data scientists, and they're like brilliant. They're all from, I think, actually MIT. And it was him standing next to another VC who was a bigger VC than us, more well-known. And the guy was like very arrogant and very pompous about the whole thing. He said to me, this is what my contact is, the person who works for us. And he's like, I was just nice. We got in, they didn't. So I was just like, just be nice. I was like, at NASDAQ, when I was the head of strategy, I had people come in, they're always like, a little nervous or something, and they want to sell me their company or whatever. I was just nice. I wasn't, I had other people sitting at the table from NASDAQ who were not nice. So I could always be like, okay, you can be the not nice person, I'll be the nice person. So I mean, that's really the way we are. And I think what happens is people will tell you more. When you're, I think if you walk into a room and you're talking to a venture capitalist and, it's a top tier VC, like an A16, they'll usually be pretty nice. They're not, it's the ones that are like kind of jerky and, arrogant that, you got to say to yourself, do you really want this person's capital? Do you really want this person on your board? Because any chance they have, they don't mind throwing you out, right? And they're already showing it to you. The other risk is that you have, you kind of go into it and it makes you nervous. So you don't end up really doing the pitch well, which actually is not good for the VC. Because if you don't do your pitch well, I mean, everyone's always like, you have to learn how to pitch. Yeah, but you also have to learn how to listen. And you have to learn not to make people too freaked out so that you can actually get to the information. So I think, the one thing I would say is that when you go into something like that, the process is we speak to the management first. We get deal flow from all over because it's global. This is the other thing different than now versus the VCs of the past. Everything had to be in Silicon Valley or had to be, in Cambridge, or you're right. Everyone's around Boston. You're all because the VC wanted to be able to get into his car or her car and drive over to your office. Now in this world, everything's global. I invested in a company that's based out of like Australia, New Zealand, Singapore, and in this environment, you might be living in the U.S. or offshore somewhere, but you might be located in Singapore as a company, because they have pretty decent crypto laws. So it's a different ballgame. And I've invested in companies I've never met personally. I mean, I started during COVID. So I met entrepreneurs I have never met personally. And you have to really do the due diligence. You have to look and test the data. So when you are meeting people now, I think you guys have it a little bit easier because there are so many funds out there that are not so like, oh, you need to move into the Bay Area. That doesn't really matter that much anymore. So I would say that when you're talking to VCs, depends on where you are, but I assume that you guys are all seed startup people. I would say you also want to try to find angels. Like Ken Cron was this person who works for us, wanted to do a game, a play to earn game, had this great idea. But I'm like, I'm not a gaming expert. I like your idea. I was like, go find a gaming expert. He came back with Ken Cron. I was like, wow. And the guy invested $500,000. And I had to match it with 250. I was like, done. I was like, if Ken Cron's involved and he has these guys and they have their whole fund and everything, I'm like, yeah, let's do it. It's worth it. So I think it's always good to try to find someone who could be on your side, a little bit more of a mentor, as well as, just like an angel investor. I think is always you definitely want to try to find a good angel, because if they're a good angel and they're well, actually, they have a lot of experience and they're well heeled, they're going to help you deal with the Series A. They're going to help you work through some of those problems.
I mean, we were talking with like a lot of people in venture capital, and we've realized that networking is a big part of being a seed and startup owner or stage founder. And it just seems like natural because VCs have these tight parameters, I guess, in which they will invest in something. It seems like that is what you mean by the video games. You might not know, but someone who does know, and so therefore there's the network. Do you have any like concrete advice, I guess, for our startup founders in terms of obviously reaching out to people and showing good manners, how to build that network in that space, how to really contact those angel investors?
Well, if there are any projects in blockchain, the crypto investor, so VC investors, the traditional VC is very set. You have to be this size during the seed or the Series A. The owner should have this much, and everything is very, very almost like it's a real process. I'm a private equity public company strategy person. I've never raised really money from a venture capitalist. I've raised money from private equity firms or the NASDAQ or in public companies. So my world is slightly different. I am not an expert in that VC process. I have friends who are VCs, and they when I get on the call with them, I'm like, wow, you guys really have a very strict process. Why are you guys so strict about everything? And they're like, well, because it gets out of link, and you want to make sure that you can get the guys in the Series B, and if it doesn't look right, and I realized that's what I did with the SPAC. Like the SPAC, I made it the most vanilla. Like it's got to be a certain way so that I can get a deal done. So I understand that. If you're in blockchain and crypto, it's all over, and people don't care as much. No one's too crazy about, because people are buying tokens, not even buying equity sometimes. So they're not. And then the token's liquid potentially. It's like trading on exchanges and such. And so it's a little bit different. And I think if you're going into something more blockchain oriented, I would say you definitely want to talk to all the crypto. And then the crypto VCs, like the A16Z guys, even though they're VCs and they're from the traditional, VC structure, they also are pretty flexible. From what we've seen, and there's a lot of capital in, and there's more capital coming in. I mean, I'm being asked to raise a fund next year. Like I've had a couple of conversations with some fund of funds, they want me to raise a very big fund, and I'm like, okay, I have to make sure I can put it all to work. but or I could put it to work over like actually 3 years. But that's the idea, is that you on the crypto side, you'll get a lot of acceptance and conversation. You go to and like the events, like right now, it's Art Basel, it's Blockchain Week in actually Puerto Rico. So there's 2,000 crypto people that live in Puerto Rico because of the tax break. My parent company is going to be in actually Puerto Rico. So you go to a conference like the Blockchain Week in Puerto Rico, and everybody's there pitching, and there's tons of investors. And then don't forget, in the crypto space, there's also people who've just made a lot of money that want to invest in new projects that are individuals, and they might be close to your age. I'm talking about like 25. We kind of laugh because we're like, there's like 25-year-olds running around with like a Lambo, like just funny. And they're like, on yachts and stuff. And it's like they're going down, they're out of their minds. But they're having a good time. But at the same time, they want to invest in more projects because now they have all this capital that they never had. And they're trying to like, and they love blockchain and they love crypto and they love the game. So I would say, you can talk to some of those too. But all that said, if you expect to go down the VC route in the future, you should probably start off on the VC route in the beginning. Because if you don't look right for the Series A or the Series B, because you made some mistake by, not structuring it properly in the early days, they'll just be like next, right? They'll unless it's an unbelievable product, or service or whatever the idea is or whatever is happening, right? But I would say that if you want to go down the traditional VC route with any of your things, and it's not blockchain, I would definitely learn as much as possible about that route and make sure that you understand it completely so that you don't get caught off guard.
So we probably have time for one more question, but Chris asks, he has to leave soon. And so what is the best way for us to contact you? Also, this is for people who will be watching the recording if they want to ask questions or
Sure.
pitch.
So why don't you guys like use email, because I don't really give out my WhatsApp and all that stuff. You can find me usually on I'm on Telegram and WhatsApp. I don't really go on Discord that much. A lot of other folks do. But WhatsApp is and Telegram. But if you send me an email, it's my last name. My first name is Enzo. Villani, Villani at alphasigma.fund, and you can find me there. And then and if you have something interesting, show it to us. I mean, especially everything blockchain. If it's not blockchain kind of related, I'm not going to really I'll look at it, but I invest in some stuff privately. But if it's blockchain issue related, yeah, just send it over, because there's there are funds out there too, like Blockchain Founders Fund, that actually helps to incubate some of the projects too. And we kind of incubate some projects. We don't advertise it, but we'll kind of incubate some projects.
So thank you we have your email so we can share it.
Great.
As a former professor also who taught venture capital and private equity, what kind of advice do you have for undergraduate students or graduate students about breaking into either the financial markets, marketing, blockchain investing? What kind of advice have you heard and found impactful?
You got to just show up. I mean, really, like 80% or 90% of everything is just showing up and learning and meeting people, and don't expect things. I would say, how you court friends, like you kind of have to do the same thing. Don't be too aggressive. Don't don't act desperate about it. Like, you think about like the way you are with people in general. People are people, right? People want to buy things from people that they like. If people want to invest in people that they like, and they want to get along with them at the end of the day, even though they may not act like it. Look at Tim Draper. He invests in tons of projects. I know some like he invests in I've seen him invest in companies, tons and tons of companies. He's like a really solid. I like really like the way he is. He's nice. He's not. He lets people talk to him, and he's not. You know, he loves the. He likes it. He likes the action, right? And I think he likes to. People want to get to know who the person is, and you don't have to try to be someone who you're not. That's all. I mean, I would just say, just act like when you want to court a friend or a girlfriend or a boyfriend or whatever. It's almost the same type of of idea. You have to be just like a little bit courting. Don't be like, oh, I got, unless they really love that. There are some people that are these seasoned angels. They're like, give me your 30-second pitch. So you give it to them, but really you have to find a way to just give them that 30-second pitch, but without just being another 30-second pitch. Like, I don't know what it is, but you have to come up with something that's going to be like, I'm not going to forget that person because of whatever happened, whatever they said or whatever they did, Well, so you have to find a way to kind of stand out a bit. That would be my last comment.
Uh, Claire actually has a question. Go ahead and.
One last question for you to squeeze in. Something that I'm really curious about is that I think me, like a lot of people, I'm blown away by the fact that 11 unicorns by as of like January 20, like since January 2020, it's crazy. Something that's not accomplished by many funds. And you're so humble about it, attributing it, to the burgeoning market. But I have to ask, have you noticed any kind of it factor in the companies that you've looked at, the ones that have done well, the ones that did not become unicorns? Is there an it factor? Is it something in particular that you think they share in common that people should?
You know what? They're usually experts. A lot of them were experts in a version of the business that they're in blockchain. So the actual Voyager CEO, who's a good friend of mine, was the president for E-Trade. So he starts Voyager, which is a crypto version of like an E-Trade, right? The track guys, the guys out of Origin Trail are knowledge graph, search, and supply chain experts before they got into blockchain. The best fintech projects, like even, or they're just a great entrepreneur with a lot of history, like Celsius is Alex. Alex has done, Alex invented voice over IP. What we're doing right now, like voice over IP was first, every phone. And he was one of the inventors of voice over IP. So yes, but when they're younger folks and they're not as established as Alex, let's say, or Steve, who helped to run E-Trade, you go with the people who are like, a true expert. Like the guy that runs Quant worked for the UK and ran the healthcare payment rail system for 10 years, which is a huge system. So of course he would be good at running CBDC, banking, interbanking. For someone who's younger, I would say anything that, it's hard to say like when you're just coming out of college because you don't have a lot of expertise in a certain area. But I would say that you can find people potentially, like if you have a great idea for, let's say, I don't know, a healthcare blockchain project. If you don't have the experience, you do what this person Dante did, was he found Ken Cron, who's the gaming legend, right? So if you can convince a couple of key strategic angels or advisors that have healthcare experience in relation to what you're trying to do, that is a winner. That's definitely one of the it factors.
Got it. That makes perfect sense. Thank you so much, Enzo, for talking to us. I also wanted to ask really quickly, what your thoughts are on perhaps making this a podcast for our podcast, The Rundown, because we have such great recording from you. And I know because it's the first day of reading period, we've been seeing, I guess, fewer students than we were hoping, just because everybody is intensely
right, it's finals. Yeah, no, I have
so much good stuff
like a couple of interns that are like, yeah, it's finals. We can't talk to anyone. So sure. We're actually even thinking about starting to do a podcast because like Michael Turpin, like I started interviewing at the Coin Agendas. He would give me these special interviews where I would do. I did like Pomp. I did his interview. I just interviewed the founder of Wall Street Bets at the last Actual Coin Agenda, at the Puerto Rico one, which I may not be able to go, but I was going to be the person to actually interview the person at a Ripple, the head of Ripple. So he likes, so people are like, why don't you have like a podcast where you're also kind of interviewing people that are doing these projects?
Yeah.
So we're gonna probably start doing that too, and because I'm not a big fan. So I don't think everybody should have a podcast. I think there's just too many podcasts. But I'm like, okay, we'll give it a try. But if you guys have a podcast, I'd be happy to come on it and go like a little bit longer format. This is I don't do a lot of marketing for the fund, so and for my projects. So this is probably like one of the only ways that I do it now.
Got it. Sounds great. Thanks again.
All right.
Thank you so much.
Great.
We'll
Thank you,
be-
everyone. Have a great weekend
You too.
and keep studying. Yeah.
We will. Okay, I will run to Yuechen's